Hey everyone, me Kevin here. The functioning of the market has flip-flopped. We've got a very weird thing happening in the markets. I am going to show you what is happening, and then I'm going to try to explain what is happening. I am also making trades. So if you want to know every single trade that I'm making, whether it's a buy, a sell, a crypto, an option, a short-term YOLO, I label my trades as either the trades, longs, YOLOs, high risk, low risk, all of it in the Stocks and Psychology of Money group. Link down below. Get that 40% off coupon before the price goes up thanks to inflation by September 24th. Use that link down below. Okay, let's get into what's going on. So first thing we're gonna do, folks, take a look at this. You should be extremely familiar with this chart by now. This is the 10-year Treasury yield. It is extremely important to follow this chart because it's really weird what's happening right now. So here's what's going on. First, remember what happened at the beginning of the year. We rallied in January when the 10-year Treasury was at its lowest point. We had a rally over here. Then, as soon as this chart went up, so as soon as these bars went up, stocks started plummeting. We had a plummet around February 19th, which is right here where my mouse is, in the stock market. Because all of a sudden it's like, oh my gosh, look at what Treasury yields just did. And then they kept going up, 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 up. March was ugly. And May was ugly too, as 10-year Treasury yields stayed high. This was because the market was fearful of inflation. When the market feared inflation, Treasury yields went up because people didn't want to own bonds. When people don't buy bonds, the price of bonds falls and the yield goes up. So in other words, this line going up was bad. We did not like this line going up because it was bad inflation news, not good. Up, bad, okay? So the reverse would then make you assume that, well, down is good. And when we were falling into April, the market actually recovered. We went up. When the yields fell, the stock market went up. This was true over here, February through May. When rates went up again, the yields went up again, the stock market fell again. In fact, look right here. February 12th is the peak right here. February 12th is a day that I put about $1.5 to $2 million into the stock market because everything was at insane lows. Obviously, every time I buy sell, I send alerts on these things. But look at this. You go to February 12th, or not February 12th, May 12th. This was a low period right here. Look at this. End phase closed for $116. It's, you know, in the 160s right now. Tesla on May 12th was somewhere around $5.99 was the closing. That was a big low. Look at almost any tech or larger cap stock or even smaller cap stocks. Almost everything was low on the 12th of May. It's crazy. Okay, but there's something really weird that happened because so far we understand this. Line up, bad. We saw the line go down in April, good. Line up again in May, really bad. Like the peak here literally lines up with the bottom of the market, right? So this should be really good, right? The 10-year going down, that'd be good, right? Well, not necessarily, because something really bizarre and freaky has been happening in the market. And it's easiest to see it when I go to the 1-month chart because I finally found it. I have finally found it. Take a look at this. Go to the 1-month chart. Take a look at what's happening here. So there's a pattern here, and it's very, very bizarre. Look at the 2 points where this chart is at its lowest. That would be today, roughly. We're close to a tie here on the 30th, but that's roughly today, so maybe call it 3 points. Roughly today, and clearly August 18th, 19th, and 20th. Which if you look at a lot of stocks for the 18th, 19th, and 20th, go to, let's say, let's type in end phase here. Go to the day chart, zoom in over here, go to the 18th, 19th, and 20th, and you're actually at a low, just like you kind of are now. Go to NEO, for example. NEO, same thing. 18th, 19th, and 20th, red, similar place today. Let's go to Square. I haven't checked Square. Let's see. Square, we're lower now, but these were also low days over here. 18th, 19th, 20th, these were low periods. Maybe not necessarily the lowest, but they were low periods. And so the point is to show that something interesting is happening. When the 10-year Treasury yield falls, the stock market falls. Look what happened today. 10-year Treasury yield falls. But wait a minute. The 10-year Treasury falling is supposed to be good for stocks. That's what we saw throughout the year. But that's not what's happening now. And there's a reason for this. I'm going to explain that. But first, why did the 10-year Treasury yield fall? Well, the 10-year Treasury yield fell because we got inflation data today. Big inflation data came out today for August. That is not September, October yet. I just want to be very clear. I've always said that I believe we're going to get a nice inflection point down in inflation in September and October. I could be wrong, but September, October readings do not come out until October and November. They lag a month, right? So hopefully we see that inflection point down. We've already, though, in the August reading, seen a flattening and a slight curve down. Like the curve is starting. We're on the right trend of inflation inflecting down. We had a year-over-year inflation at 5.3% instead of the expectation of 5.4%. We had month-over-month inflation coming in at 0.3% rather than 0.4%. We did not see rents increase larger than we thought. Annualized rate of 3.6%. That's not a big explosion. We did not see wages and service prices go up as much as we thought in the inflation report, which is good. We saw used cars go down. We saw airfares go down. We saw lodging go down. We saw a lot of segments in the CPI report that have been high go down, like used cars. These things have been skyrocketing, right? So this inflation reading led the Treasury yield to fall. Now, remember, early in the year, Treasury yield fall means stocks go up. Today, and this sort of last month, Treasury yields go down and stocks go down. And so now it makes sense that all of the indices are virtually red. And I say virtually red because when I started filming this, the NASDAQ was red, but now the NASDAQ is of course green when I'm filming it, but it's barely green. It's basically red. It's like embarrassingly green. It's like you may as well be in the toilet, NASDAQ. Come on, get with the program. Follow the other ones. But anyway, why, folks? Why? What changed? What shifted the market to all of a sudden have stocks go down when the 10-year Treasury goes down? Well, here is the answer for you. And it has to do with short sellers in this as well. I'm not going to re-explain the short sellers here, shorting 10-year Treasury yields and getting out of their short positions. I'm going to go a little bit more broad. I'm going to get out of the bond discussion here. We've talked about short sellers in another video. So if you're thinking about that, yes, that's related, but that's separate. I'm going to go a little more broad here. What's happening is the markets are finally baking in fear again. They're baking in valuation fear. They're doing that because we're getting slower growth forecasts. The IMF, the World Bank, the EU, America, economists at Goldman Sachs, Morgan Stanley, whatever. For the last 2 weeks, they've all been whining and complaining like little weenie baby pansy babies going, I kind of wonder if growth has topped out, and if growth has topped out, then stocks might not perform that well anymore. So in other words, Treasury yields now falling is just become a rebranded sign of, rather than, oh, phew, inflation's not going to be here. Rather than that, the market's now rebranded inflation or Treasury yields falling as, oh, well, wait a minute, that means growth is slowing. That means, wait a minute, maybe we actually need the taper to continue because the economy's not as strong and stable as we previously thought. And wait a minute, all this money that consumers had and the personal savings rate skyrocketing, wait a minute, now we're realizing it was mostly due to stimulus from Congress. The 3 stimulus checks, unemployment payments, all of these things were propping up the market with this fugazi fake printed money. That's temporary. And the market was essentially pricing in, oh my gosh, everybody's spending money like crazy. This is never gonna end. Everything's great. And the market's pricing in these like perfect growth patterns for all these expensive companies, these high earnings companies or high PE companies, price to earnings ratio companies, right? You know, Tesla, Apple, what I mean, Apple not anywhere close to the price premium that you have to pay to get into Tesla. But the point is, people are pricing in, oh my gosh, people have so much money, people keep spending. But now it's like, wait a minute, no. The well of cheap money has stopped from Congress. We're not getting stimulus checks anymore. Yeah, we've got the child tax credit, but we're not getting the unemployment payments anymore. And so a lot of the money that's being injected in the economy, increasing that personal savings rate, has now evaporated. The latest reports show that the personal savings rate now is almost flat compared to prior to the pandemic, which implies that growth might slow down. Then we look at air travel slowing down. Sure, Delta is having an impact, but it's not just Delta. It's the fact that that the economy is slowing down, which is actually something that Jerome Powell predicted. Jerome Powell said we would have a burst of inflation when the economy reopens, and we would have a burst of spending when the economy reopens, but then we'll probably go back to normal and we'll see that burst of spending go away, and that's why inflation might be transitory, because people aren't going to have all that money forever to continue spending. Remember, folks, to have inflation continue, you can't just say prices went up 10%, oh my God, hyperinflation. Ah. No. Inflation has to be persistent. Are airline tickets going to go up 10% from $100, let's say, to $110, and then another 10% to $122, and then another 10% to, whatever, $134 or whatever? Is that just going to continue on and on and on and on? Probably not. You're going to see prices go up to $110, oh my gosh, 10% inflation, and then $108, oh, 2% deflation, approximately, right? I'm rounding a little bit. And so that's what's happening. And part of it is happening because people, and I think the market is starting to go, wait a minute, Jay Powell was right. Not only is inflation likely to be transitory, but that burst of spending was just temporary, which means those insane growth rates that we're pricing into all of these consumer product companies are now going to slow down because people don't have the discretionary spending anymore, and people are going to be buying Pelotons like crazy anymore. They're not going to be buying all this clothing like crazy anymore. They're not going to be buying computers and iPhones and iPads and all this junk because A, they've already bought it. Kind of like Kathy Wood says, they've already bought their refrigerators. They've already bought their cars. They don't need another one, right? But in addition to that, they have less money. So now we rebrand, and it's weird how the market flip-flops, but it's just worth identifying. Why is the market falling? Well, it's because this chart going down is actually a symbol of weaker growth. So if I go back to year to date, it's so weird, but over here at this half of the chart, inflation was the big concern, which we knew that inflation was coming. It was like everybody, look, I made videos at the end of November and December of last year going, just a heads up, we're gonna get a lot of FUD about inflation. We're gonna hear nonstop about how high inflation is. Go on my TikTok, scroll down to my Bitcoin prediction video, and you will literally hear me say it on January 6th. We're gonna get a lot of FUD about inflation. Boom, that's what we got. It's also around the same time we had this insane crypto rally, which according to my latest Twitter poll of those of you who follow me at RealMeKevin on Twitter, 48% of you invest in crypto as inflation hedge. Makes sense. Inflation was the fear here. Crypto goes to the moon. Now the chart has changed. The chart goes down. Uh-oh, the economy's weakening. Wait a minute, we've overestimated earnings for companies. Oh crap. And crypto's kind of trading sideways. It's recovered from its lows, but it's kind of trading sideways. So what does this mean for investing going forward? Well, I'm looking for opportunities as usual, but I'm very interested in covered calls. I love selling options in this market. I am selling options into this market. I'm interested in selling puts. I'm interested in selling calls. I am interested in buying cheap opportunities when I find them. Personally, I'm keeping an eye on Win. I've not bought anything here yet. I'm watching the momentum stocks. We're getting like these day trader momentum stocks like Ethereum, like just getting destroyed today, down 28%. Makes sense. It's a momentum stock. Dave & Buster's down 4%, AMC down 3%. No, I don't see huge opportunities here. Poshmark is one that has just been getting devastated. I'm curious if there are opportunities there. That's another one that I'm kind of keeping an eye on, as well as Wayfair. But looking at some of the other stocks here, I'm not necessarily seeing an opportunity in Etsy at 217, right? Matterport at 815 or 850, too expensive to me. Square at 250, too pricey right now. Peloton, my goodness, sell. Like too pricey at these prices. Tesla at 750. Okay, but I mean, I'm not buying it right now over 700. Apple 150, not buying it right now. I'm kind of on standby. I'm looking for those individual opportunities, kind of like when Hippo was at, $4.90. That was exciting to me. When, and I still think Hippo is exciting. 536, okay, so it's up, what is that, 10%, 10, 15%, something like that effect. Ran up to about $7. That's too rich. Do I think Hippo's worth 536? Yeah, I think it's a good deal here. Under $6, I think it's a good deal. It is an older SPAC though, so expect SPAC volatility, right? Affirm at these prices here, very expensive. 112, very expensive in my opinion, especially with no Amazon revenues to be seen yet. Probably not seeing them for another 3 or 4 months before we actually get Amazon revenues. No thanks. This would be something that, in my opinion, I'm more than happy to sell calls on a green day like today. which remember, anytime you want buy sell alerts, check out the program's link down below. Where am I looking for opportunities? Well, I'm looking for things that are beaten down and depressed that I think have the potential of running. You know, Redfin for me is very interesting, but and it's gone down substantially, about 50% from its peak here. I bought a lot of this company between $10 and $30, so my cost basis is very low, but it's nowhere near what it used to be. And so it makes me wonder, okay, is this going to come back, or is it just going to be kept down because of potentially this fear of slower growth, the slowing real estate market, and potentially interest rates going up? Or all three of those could be weighing that stock down. DocuSign has fallen off of its 300 highs, 271, still a little bit rich, but these are ones where I'm looking at, okay, we're selling down a bit. 269 on Wayfair, despite the fact that the CPI report today showed inflation in furniture. That's interesting to me. Those are individualistic opportunities. Here, look, I have the CPI report right here. Bedroom furniture up 0.9%. Living, kitchen, dining room furniture up 3.8%. Other furniture 1.7%. It would be worth looking at the earnings call for Wayfair and seeing what kind of pricing issues they're potentially seeing with their products, or you know, in the inflation side. In fact, let's just go do it really quick. Let's look at it together quickly. So let's go to Wayfair and pull it up. These are the kind of things that I'm doing. And when I see opportunities, I pounce on them. Obviously, you can't expect that I'm always right. And I don't expect myself always to be right. I make mistakes too. But I'm looking for those opportunities. Most of my portfolio, about 80% of my portfolio, is in long positions. So I just don't play with that 80+%. But the other percentage, cash, crypto, and just money that I'm kind of bouncing around or trading between stocks. Hey, I like doing that. It helps me keep tabs on the market, and it helps me understand where to place long positions and long bets too. Take a look at this. So here's Wayfair's earnings call. These long-lasting supply chain issues have also resulted in inflation. Yeah, no kidding. We see that in CPI report too. See, this actually predicted inflation right here, this earnings call here. This earnings call, by the way, is from August 5th. So, you know, that's over a month ago. That's 5 weeks ago. We're working with suppliers to pass through some of these higher costs while paying close attention to consumers' reactions to higher prices. So in other words, how much can they pass on to consumers, creating that inflation? So far, we believe customers are generally absorbing the higher prices reasonably well, though the operating environment is very fluid. Yeah, maybe consumers are paying those higher prices a month ago while they were still getting stimmy. Now the stimmy's up. Are they still going to be willing to pay these higher prices? Or is this going to be a potential issue for Wayfair going forward? Where we have a view of cost pressures being more transient, we're being thoughtful as to how to reflect that to the end consumer. Okay, so they're starting to already be sensitive to like, oh, we're starting to see elasticity of demand shrink here. You know, people are less interested in paying higher prices, and so they can't pass it all along, which hurts profitability for a company like Wayfair. But, you know, those are the things that I want to pay attention to. Do we think they, you know, can we go to their website? What are their website analytics like? What are their pricing, you know, what's their pricing like online? Can I call their call center and figure out like, hey, you know, what's it been like working here the last few nights? Have things, or last few weeks, have things been slowing down or picking up? You know, little things like that are always things that you could do when you do market research. All very, very important. These are the kinds of things that I do. But I am looking at, I'm looking for dips. Hippo the last 3 days has had a nice dip. I still think 536 is a bargain of the company. I've got a covered call. When this thing ran up to $7, I sold a call for $7.50, like way out of the money, and I got a fat credit for doing that. And those are the kind of things that I like doing when stocks run euphorically. And $7 was way too high, nice little euphoric run. But right now, that call option gave me a, here it is. That call option gave me a credit of $32,500. And if I wanted to buy that back right now, I would be up profit right now if I close out 20 grand on that covered call, but I'm going to hold on to it. So that's awesome. I love having those covered options, especially since it's a 30-day contract. It's only got 30 days left on it. So that's 30 grand in 30 days. That's $1,000 a day. Like, that's awesome. I love the covered calls, especially if I'm willing, like $7.50. Golly, if it's at $7.50, why would I not sell it, you know? So anyway, that's great. Love that. So yeah, great, awesome. Well, that's my update on kind of what's going on in the market, what I'm looking for, what opportunities I'm hunting for, and hey, stay tuned, subscribe to the channel. If I see a big opportunity, obviously if I trade on it right away, I send alerts. And then if there's something bigger that I love, I make a video about it. I've made videos about Hippo and Affirm, love them. Affirm's a little rich right now, not buying more Affirm right now. Bought most of my shares in the 80s, bought a little bit at 108, and on pause right now, willing to sell covered calls or just sell covered calls. In terms of Hippo, cheap right now, but there's also downside risk because it's a SPAC. SPACs get rubber banded down, so keep that in mind. But anyway, folks, thank you for watching this video, and we'll see you in the next one. Thanks, bye.